Hi, this is Jack from Alpha Charts with the long view video. Today is March 19th, 2022. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so to go over what the long view is again, remember I am looking for outperformance by these. I'm looking for outperformance in these names. We were using weekly charts to help manage these positions. Again, this video is made for everybody, but especially for the people that are working full time and can't be on top of the market every second of the day. This is the video really where you're able to get in and follow trends and not have to manage individual names. This will focus on ETFs. I'm using Trader Lion's relative strength line on TradingView as my to help me with my relative strength work. I'm comparing everything, subsectors to the S&P, then individual, sectors to S&P, subsectors then to the sector, and then the ETFs I found will then be compared back to the S&P. Okay, I'm looking for trend alignment. I am looking for basing of a name, and I'm looking for potential buy areas, right? So that is the idea behind this video. I just like to recap it so y'all know kind of where I'm coming from. Again, this is a relative strength, longer term look video. Again, weekly charts only on this video. So you know, this is an 8-week exponential moving average, and this is the 13-week exponential moving average. Those are just the moving averages I picked to identify trend. Any close below the 13-week, and I think that's a sell signal for me. Right, volume is on here also, and again, the Trader Lion relative strength line is here. Okay, so let's get started. First one will be RTH. All right, so discretionaries are starting to perk up a little bit, and RTH is the one that I picked. It's a retail ETF, and I like that it's broke this downtrend. Now you're about to get this cross. Haven't quite gotten it yet, but price did have a very powerful move up, gigantic amount of relative strength. A little late on the volume. That's the only thing that gives me pause with this particular one. Looking what's in here, you got Amazon, Home Depot, Walmart, CVS, Costco, Lowe's, Target. So a lot of the big boy retailers, again, there's your net weighting on that. And this will get bullied by Amazon a little bit because of that gigantic weighting in Amazon and really Home Depot too. They're making, you know, over 30% of the holdings. So those are a big deal for this one. But either way, nice looking move right there. It's a way to be involved in Amazon without buying Amazon. You know, and Home Depot and Walmart and all those names. Anyway, good looking name there. Again, a little bit light on the volume, but still, I like the way this looks. That cross is going to be imminent probably by next week if this continues higher. That was the only one in discretionaries, XLY. In financials, I'm sorry, not financials, energy. A new one that I found this week is ICLN. It's a clean energy ETF. And it's looking pretty good here. So you got this downtrend line right there, and the cross is, again, it's imminent, right? That's going to happen as long as price stays above $20 next week. You can see how this is kind of how this bottoming action is starting to outperform this way too. So a really nice looking name right here with potential bottoming action. What's in this? Enphase, wind energy, it looks like, Solar Edge is in there, Plug Power is in there. So some names I'm familiar with, some that are going to be Chinese names and you know, potentially foreign names in there also. There's your weightings right there. So a nice looking ETF with clean energy theme to it. Again, it's not a bad looking name here. Again, the cross is imminent, so I do like that also. And over the last 2 weeks, the volume has been, decent. It shows maybe buyers are showing up in there. So it's ICLN. XOP is still on this list because it's still pretty strong. It was down for the week a little bit on lower volume. Is it extended and just consolidating? Maybe, that's a possibility, but it hasn't stopped out. It's still above this 113-ish area. So nothing wrong with oil and gas names. Again, looking back, as long as it could continue moving higher, I think it's a nice little buy here. Let's just see how far it is from the 8-day. Yeah, it's about 7%. So maybe a little extended for me, but either way, XOP, if you want to be involved in oil and gas, this one seems like it's a decent spot. QCLN. This is also a clean edge green energy index. Okay, so kind of a similar look, big up to the ICLN one that we just looked at. And as you can see, this is starting to really started to turn up on the relative strength piece, broke the downtrend line, and the cross looks like it's going to be soon, right? It hasn't quite happened yet, but looks pretty good there. And what's in here? You're going to get Tesla on semiconductors. There's your end phase. We saw the other one too. Neo, Albemarle. I don't know how you say that. Anyway, Plug Power, Solar Edge is in there, MP is in there. So some really nice names that you get to be a part of, right? In this particular one, that's QCLN. You see the whole listing right there. Ballard Power's in there, Sun Power, Bloom Energy's in there. That's a nice looking name. Again, you're not getting it's only 1% of it, but again, you're participating in all of these names at the same time. And nice looking turn over here, uptick in volume, breaking the downtrend line, and cross looks imminent. So that looks nice too. All right, and let's be honest. Let's say it just goes back up and retests the breakout, right? Well, not the breakout, but the overhead supply. It's a 35% move. That's not a bad looking move. Again, nice names in there. That's QCLN. What else is next up here is, okay, in XLF. So I did like the way XLF looked, but I could only find one ETF that looked good to me, and that was the insurance ETF, IAK. A little thinner on the shares on average per day. What was QCLN? Yeah, that's plenty liquid. But yeah, so IAK is insurance ETF, and again, a little bit thinner, but nice turn up, really strong look. Is that all-time highs? It's not all-time highs, it's close. It looks like all-time highs. So closing at all-time highs in this environment, pretty good. And there you go. So you're gonna get Chubb, Progressive, AIG, MetLife, Travelers, Prudential, Allstate, Aflac, yeah, and so on. Again, there's your weightings right there. Really strong names. As long as the insurance names are going to continue higher, these are the ones that will probably lead it, and it should lead this higher. Again, nice uptick. Overall looks really, really good. That's IAK. All right, so that was the only financial one that I liked right now. Some of them are starting to shape up, but not good enough to make the video this week. They may be on next week. Healthcare, XLV. I have 3 ETFs in here. IHF is the first one. Nice looking name here. It had this consolidation, and now it's starting to turn up. It did have a cross. I'm going to zoom in here a little bit so we can take a look at it. Yeah, so it did cross. I like that it's kind of breaking out of this area. Not quite all-time highs yet, but looks good and very nice on the relative strength line here. Again, a thinner name, just be aware of that. And looking at what's in here, United Healthcare is 23% of it, CVS is 15%, Anthem, Centene, Cigna, HCA, Humana, and you see the rest of it here. So again, a nice looking name, again, a little bit on the thinner side, but yeah, but definitely breaking out, if nothing else. IHE also, again, thinner on the volume. And so you have a choice here. You can, choose to go with this, or you choose to go with the, XLV, right? You just pick up XLV. That's the broad sector ETF. And then, you're going to get plenty of liquidity in there if you're worried about liquidity, right? So that's always another option. Again, and it looks great, screaming higher, and then you'll get all those names also. But look at IHE, the pharmaceutical index. It's got this little double bottom look to it. And there's your kind of your neckline, we'll call it. Good uptick in relative strength. That always looks nice. Looking what's in here, it's Johnson & Johnson, Pfizer, Bristol Myers, Eli Lilly, Merck. Not sure this one is, but Elanco, they do pet meds, and Zoetis does also, I believe. Anyway, so nice looking group here. Again, there's your weightings. You can see it's 45% Johnson & Johnson and Pfizer. They're going to bully this particular ETF. So just to be aware of that. Again, if it's too thin for you, XLV is a good choice right there. BPH, a little bit more liquid, and I do love the breakout that's happening over here. This is the Van Eck pharmaceutical ETF, and it's a little bit different in its makeup, right? So AbbVie is 6%. Again, you don't have that bullying that the other one had of Bristol Myers and was it Lilly? It was Bristol, Johnson & Johnson. I'm sorry, Johnson & Johnson and Pfizer, right? So you see that this is a little bit more. We won't call it equal weighted, but a little bit better. There's your Pfizer down here. It's at 5%. Johnson & Johnson's also at 5%. So they only make up 10% versus 44, 45%, whatever it was. And again, you have drug distribution. You have companies. There's your Zoetis that's on there. Teva, Jazz, Elanco's down here too. Again, all kinds of different stuff in this ETF, and it's made up a little bit different. So know what you're buying. I think it's really important. That's why I'm going over the individual companies that are making it up. And I do like this one broke out. So this one is, I think, higher on my list as far as a drug ETF than the IHF. So IHF, no, it's providers, I'm sorry. Pharmaceutical here, IHE. Then IHE hasn't broken out yet, but PPH has. So PPH definitely looks better. All right, next up will be industrials. All right, let's go ITA. And here's ITA right here. Again, good volume coming in, very liquid name, moving much, much higher. Hasn't broken out yet, but good relative strength. You have a cross already. Very viable right here. That's up to you, but looks really good. If it breaks out, that would be really, really bullish. That's ITA. Before we do that, let us look at ITA here. Yeah, Raytheon, Boeing. Again, you see who's going to bully this one. It's a weighted one, but all the players that you would expect are making up the top tier of this. So that is ITA. And then let's look at XAR. So here's XAR, and you see this major volume coming in since February 22nd. I believe that's when Russia invaded Ukraine, and look at this relative strength. Kind of started a couple weeks prior, but really went to high gear the last 4 weeks. Looking at what makes this up and what makes it a little bit different, you see it's an equal weighted ETF, right? So you do have Lockheed, Northrop, all the same ones, but you're gonna have more of them and they're all equal weighted, so there's probably 20-ish names in this, maybe 20, 22 names, something like that, in this particular ETF. And again, you get a little bit of the equal weighting versus the cap weighted. So that's XAR. Again, beautiful uptrend looking, and that cross just happened. So that's really nice to see right there. And then EVX. All right, this is the environmental services, and man, beautiful relative strength right off the bottom. Look at that. Really nice. But now that cross just happened, right? And we want to see that bullish alignment. We're just getting that now. And so again, not a very liquid name, right? I guess people aren't trading environmental services all that much. So let's look at what makes this particular ETF up. There it is. Again, you have Waste Connections, Republican, people that pick up your trash, Ecolabs, people that clean things, right? There's your Darling Ingredients, Clean Harbors in there. Again, so it's a weighted index. Some nice, some nice names in there. If that's your thing, that's fine. Go for it. Again, very thinly traded, so just be aware of that. But again, beautiful relative strength and looks pretty good. And the last one in this group is going to be BOAT, which is shipping ETF. This one's been on fire, and you see the shares just steadily increasing in this. Looks beautiful. Again, is it extended? I don't know, but it was probably extended back here, right? And it just kept going. But looks great. And let's take a look at this. Here's your top holdings. Again, we've talked about this one before. There's a Hong Kong one. I don't know what that is, but Zim's in there and Matson's in there. And Star Bulk carriers are in there. Those are the American ones that I'm familiar with. And there's a bunch of Japanese and Hong Kong and Greece maybe and Japan and whatever. So that's BOAT. Okay, nice looking ETF. Again, maybe extended. Maybe it needs to pull back. It's about 10% from its 8-day. That's decent, but I like how it held the 8-day, right? That was nice. All right, so then we have materials, and I have a bunch of materials in here. GDX, nice little double bottom consolidation. Got the nice uptrend going on here. Not much to say. I mean, it got extended. It's pulling back into the moving averages, doing what it's supposed to do. Don't know if this is the week it's going to pop up or if it's going to kind of come back into the moving averages for another week. Either one could be possible. And looking at what's in here, Newmont is 16%, Barrick Gold is 12%, and then Franco Nevada and Anglo Gold. Agnico Gold, Eagle Mines, whatever. Anyway, these are the names that make it up, and a lot of names that if you follow gold miners that you should be familiar with. But to participate in all of them at the same time, the ETF is a nice play, very, very liquid. So it looks good. Again, it may be extended, maybe it needs another week or two of consolidation, but it's undeniable that it has a lot of relative strength, or has had a lot of relative strength. GUNR, this one actually shook me out, which was disappointing. And we'll go over that at the end, but beautiful relative strength. Everything looks good in this particular one. Just trending higher, right? What more could you want? And I think that's it right there. And the nice thing about this one, GUNR, is that it's a mix of oil stocks, commodity stocks. You see, Rio Tinto's in there, Vale's in there, Archer Daniels Midland's in there, as well as Shell and Chevron and Exxon. So and it's not overweighted too much in any one direction, which is kind of nice too. It's GUNR. Again, it's got good liquidity, and again, just trending higher. Nice looking ETF. XME. There's your XME. I had a nice breakout. Look at the relative strength. Big uptick in volume as it's moving higher, and it got extended over here. It's a 14% week. Then it kind of went sideways-ish and sideways again-ish. And held the 8-day, which is nice. That's very strong right there. So maybe one more week, and this will be like a bull flag, comes back. Maybe if it's just the 8-day one more time, that may be a nice spot to enter here. That's XME. And this one, a couple coal names at the top of it. Alcoa, United States Steel, Cleveland Cliffs in there, Steel Dynamics, uranium. So nice little ETF right there. XME, plenty of liquidity in this one. nice trend, has everything you're looking for, right? XME. Again, maybe one more little touch right there. That may be a good spot. We'll see. And these are weekly charts. Next up is GNR. What a great ETF name, GNR. It's liquid enough for me. Nice uptrend. You see the relative strength right there. Not too far extended. That's really nice to see, right? Had a decent week of 1%. But yeah, it's kind of this like little consolidation now starting to move higher. And GNR, you're going to get Nutrien and BHP, and there's your Shell and Exxon, very similar to GUNR, right? A lot of the same names in there. Again, nothing is overly done as far as the weighting goes, which is nice to see. So GNR or GUNR, very similar names, different companies make those two ETFs. So that looks nice. What else? Uranium, URA. This is a global X uranium ETF, and a nice little boom, break the downtrend line, moved higher. Now it's kind of consolidation. There's your cross, a lot of volume coming in, and you see the outperformance right there. All right. Yeah, I don't really know these names. I know Kamiko is going to be is going to be 24% of this one, so almost a quarter of that holding is this one name right there. So there's risk right there, but overall, a bunch of uranium names. If you want to be involved in uranium, there you go. There's your outperformance right there. And again, it looks like it wants to move higher. So that looks pretty good there. URA, MOO. This is the Vanek Agribusiness. Consolidation, now moving higher, starting to get that separation, which is really nice to see over the $100 mark. Good outperformance, right? There's your relative strength. Nice looking chart there. John Deere, Bayer, Nutrien, Zoetis, Corteva, Archer Daniels. Again, some of these you saw in the GNR and the GUNR names. And then there's others because it's more focused. You don't see any oil and gas names in this particular one. All on agribusiness, right? So there you go. That's MOO. Again, nice look to it right there. Lumber, wood, timber and forestry ETF. Still in this consolidation range, but now we're starting to see this outperformance, right? That's really special right there. It hasn't broken out quite yet though. But again, that looks pretty good. The liquidity, not so much. So just be careful of this one. I try to point that out every time I see it. And I don't know too many lumber names. I know Weyerhaeuser and I know West Rock here. But there's your weightings right there. If you want to be involved in the lumber and timber industry, you like this way the outperformance looks, or the chart looks, whatever. This is the ETF for you. This one doesn't really light my fire right now, but if it broke out, that could change, right? Again, just not liquid enough. Let's talk about steel, SLX. Beautiful look right here. And it's trying to break out. There's your outperformance on the relative strength. And just, just nice move there. Again, is it ready? Maybe. I would like to see maybe a little more volume come in here. Liquidity is okay. It's okay. It's enough. And let's see what's in here. Is Vale, Rio Tinto, Nucor, and all the other ones. So you can look at what you're actually holding right here as a percentage. There's 25 holdings in this particular ETF. And those are all steel names. All right. Moving on, last one. I actually have some tech names, ETFs to talk about. First one is going to be CIBR, cyber. Cybersecurity, that's a big deal, right? So you have the uptrend, and then it pulled back, back in November, started pulling back, and there's your downtrend. And then look, it's starting to make a higher high in the relative strength right over here. And now it's really zooming higher. Volume coming in, plenty liquid enough. Like the cross is literally going to happen probably Monday morning as long as price stays above here. So that all looks really good. yeah, I mean, that's what's not to like in this one, CIBR. Let's look at we'll see what is in here. Checkpoint, Palo Alto, Fortinet, Norton LifeLock, Trend Micro, CrowdStrike's in there, Tenable's in there, Mimecast is in there. Not bad. There's your weightings right there. That looks really nice. And then BUG, Bug, also another cybersecurity ETF. Again, I love the outperformance, good liquidity, nice accumulation going on there. And I added this one because, you know what, I apologize. This is cyber right here. Again, CrowdStrike is weighted the highest. Cisco, Palo Alto, Cloudflare, Zscaler, so on and so forth. This is cyber, and this is bug. I had that backwards. But again, same idea, similar names, slightly different weightings. Just want to show you both of them. Okay. So those are what I have for you for the long view. Now, I went ahead and there's 7 names that really stood out to me. So I'm going to go ahead and just highlight those real fast. ICLN, renewable energy ETF. This one stood out to me. Very viable here. You know, especially if you're using this moving average as your potential stop. I like that there. It's not too far gone. PPH, you know, I like the breakout. That looks good too. Again, I'm picking these because there's, you know, enough liquidity in them, and they just look the best. The cross happened back here, right? But it's breaking out now, which is really nice. XAR, there's your cross right there. A lot of volume coming in, liquid enough, great outperformance. That one stood out to me. EVX, again, about to cross again, so it's very viable in this area, and that's what I'm looking for. Not too extended, right? And that's been my Achilles, which is why I'm actually doing this. I'm doing this more for me than for anybody else. My Achilles is buying extended stocks, so I'm trying to look for things that are just in that viable range. EVX. The problem with EVX is it's not liquid, right? And that's a problem. So probably shouldn't even put that on this list, but it looks nice. URA, there's your cross right there, but then it went sideways, which is good, right? There's a consolidation. It tried to move lower and the buyer showed up. So that's really nice to see. Let's just see how far it is extended from there. Okay, so it's a little extended, right, at 9%. So yeah, you got a little extended from there. So if any pullback towards the 8-week moving average here, that would be maybe a good spot. And of course, CIBR, cyber, that's cross about to happen. Breaking the downtrend line looks really good. And of course, bug, right? There you go, cross about to happen. There's your outperformance, looks really, really good. All righty, so those were 7 ETFs I liked a lot, and I kind of went through and so, you know, told you the ones I really liked. Yeah, if I cross off EVX out of here, right, that one's probably not one I'd probably do. And uranium was a little extended. I'm gonna cross that one off. We're down to 5, right? Just because it was so extended, it'd have to pull back some for it to be really viable. All right, so these are my actual trades I've actually done on this one. And as you can see, I had 2 losses. This GUNR one was just a shakeout on a bad trade on my part. This one was, you know, was okay. I did make some money on gold, and I'm still holding these and in profitable positions right now. This PBJ one may get cut early next week. I'm not sure if that one actually is profitable, to be honest with you. It's close to it. I'm actually going to check right now. PBJ for me is just slightly negative. Again, that one may be cut because I want to get into better looking names, right? You know, especially maybe the ICLN or whatever. And again, XAR I made already. So cyber name, you know, cyber looks pretty good too. So again, this is to be expected. I just started this particular portfolio for the long view. So with that being said, you know, you're going to get shaken off of some. That's just part of the way it goes. And you'll put it back into winter, you know, things that are looking better in winter. Eventually, you'll get what you're looking for. Doesn't bother me at all. This is, again, to be expected. What else? I think that is about it. If you liked this video, please like and subscribe. Tomorrow I'll be doing my stocks to watch video. I'm going to dig deep into these ETFs and pull out specific names. If you're interested in looking to see which names within these groups look good, I would check that out for sure. That'll come out tomorrow. And this morning I put out the state of the market video. Again, that shows you my feelings on the health of the market, and that's an interesting video too. If you haven't seen that, check that out on my YouTube channel. I'm on Twitter at AlphaCharts365. Hope you all have a great day. Good luck trading this week. Take care. Also, let me know down below what you liked and what you didn't like, and what I missed, and if you and what you think of these videos. I really do appreciate that. Y'all have a great week. Bye.